Alright guys, it's time to edge. Welcome ladies and gents. It's been a little while since I've been on. Geopolitical events have raised the VIX and I've just been doing some other stuff. Oh, let me sign into chat. Okay, so I was meant to jump on this morning. It's a shame really. I cracked my neck in the gym and I've been at physio this morning. But that being said, the model seems to be coming back. The VIX is lowering. Let me just get up the VIX and show what's going on the VIX. If we look on this is delayed chart in the center. Oh. Okay, so the middle one is the VIX, and it's coming back to a normal level now after all this shit we've had the start of this year. And I just want to be honest with you, I'm 22% up in 6 months, which is terrible. Haven't been trading a hell of a lot. It's not. I wanted to get to 100k this year, and it's just not happened that way. I don't think. Well, we'll see how the back end of the year goes. Right, it's June. I'm moving to Spain in July, so things are going to change for me as well there. Let's see what happens. But yeah, VIX coming back below the 18 after all of this high volume, right? So that means that risk on regime shift is happening. So the model comes back timed edge, and to be fair, I don't trade Monday, but there was a daily cycle yesterday at 3 o'clock, 3 p.m. and you could have taken out 10 or 15 R from the market, 1 hour CRT model after the daily. Okay, so there is things are happening, starting to move. Please excuse my neck, it's a little bit stiff. So things are moving, and also this morning I believe there was a daily cycle out of a standard deviation zone, okay, and along. So where's the market heading at the moment? I think we're heading for this high up here. The draw of liquidity will be this high, previous day's high, Monday high. So that's where I'm thinking price is going to draw to before we see any reversal. I have marked in the 6 hour 50% as, because we do have another daily, so 6E and 6S are above the previous 6 hour range. I still need to mark out what's going on, so I've jumped on a little bit earlier than normal, and I'm going to just profile the market, see where we are, right, and fill in my journal. If you don't have a journal, you should be journaling every day. That's because where you put your mistakes down, you learn from your mistakes, and also you can see what's going on. It gives you a roadmap for yourself, and it's good discipline. Okay, so I always start on the bonds first. Profile the daily candle, right? Okay, so we've got something going on here. Okay, we're taking If we take that liquidity above there, we could see this 3 candle model play out here, right? Doesn't always have to be 3 candle, but that is a thick high full body candle. We could see rejection here and start trading down into this low. Bonds lower, that means the FX should follow. Let's go on 6E profile, the weekly. We've been in this tight range for a little bit, okay. Previous week's range is range weekly profile, right? We've had no change of state of delivery, so this candle is closed within the previous week's range, so we are on a ranged profile. We have wicked above, so I'll mark the high of that and range weekly profile. So I'm just going to mark the high of the previous week. I'm going to see how we've reacted around that, see if we've got a daily close above. Because if we wicked above, we could see 50% of the previous week's range. So let's draw that in as well. Let's pull a fib. Want to see equilibrium, 50%, consonant encroachment, whatever you want to call it. This could be a target. It's not sequential SMT. But if we do start to pull back into this previous week's range, then you know where it's going to go. That becomes my first draw of liquidity. And I'm going to drop out to the daily. I'm going to see if price is closed above, closed back below there, back below. We did get a close above there. The actual closing price of that daily bar closed back below though. So we could see that weekly so we can keep in mind the 50% of the previous week's range as a target. We're on the daily time frame now. I don't know if that's no, we closed below there. However, we have run above, we've closed back below the previous day's low, right? So we've actually got a range daily profile. So when I'm looking at a range daily profile, I know we haven't got a clear change state delivery. It changes how I approach the market. I'll be looking for a little bit more confluence in my setup. We've also, most of the assets have traded below. All assets have wicked below. Okay, so if they've all wicked below, no SMT, and we're above the 50%, I can safely assume that our draw of liquidity is going to be other end of the range, which is previous day's high. So let me just, I'm going to take a fib. Not quite at 50% there, but we are here and here. I think there's going to be a more draw of liquidity, bigger pool of liquidity at, yeah, above previous day's high. It's going to be a bigger pool of liquidity. So could see 6E, yeah, could see 6E take out previous day's high. I'm going to monitor that. Let me just double check the news quickly. Tuesday. Right, so no news. We've got some FOMC tomorrow. No news today. So we've got no injection of volume coming into the market from participants. And the market is still moving. I think we have actually got a bullish three candle model coming on here. I'm going to mark this area here. So if we're working in a three candle model, right, I know we've wicked above. We could trade into the 50%, but we could also go up. If we look at this candle, we could be working within the range of this candle on 6S here. Right, we've also got something similar here. Right, wick below, close above, become our draw of liquidity. Okay, so it could be a three candle pattern up to there. Could be our draw of liquidity. So I'm going to keep that marked, mark them key levels there. Because this is where 6E could be moving to. I'm just going to go on a 15-minute, just profile what Asia did this morning. So I only care about the open of that candle. The open is within this range, the close is not. That's why I'm not incorporating it in the Asian range, right? Because that time finished outside of the it was 5:15 when that candle closed. Okay, so Asia actually ranged this morning. Ah, that's a shame. We missed a good setup there. Well, I missed a good setup there. Getting physio this morning on my neck. So we've had a accumulation, we've had a manipulation, we're expecting distribution, right? So we've accumulated, we've manipulated lower. All assets are manipulated lower. We got a crack there on the daily. And then there was a 1 hour CRT set up within that within that Q standard deviation, and now our draw of liquidity is going to be previous day's high because of closing above. And like so that finishes the markup for FX and profiling the FX. Now I'm going to go on to NQ. We know where our draw of liquidity is. We have got a bearish daily kicking in now. That's 10 a.m. So we need this to close. Invalidation level is that high there. So if that high gets taken, we've invalidated the crack. And it probably will because we've got this standard deviation level above it. Okay, and I think our overall draw of liquidity is going to be that key level that I marked out earlier on the weekly. So we're looking to push up. Ideally, I would take the long from the equilibrium, mean reversion, right, and then trade this a bit higher. But we are extended, and I'm not going to buy anything up here on this leg at the moment. So it's a waiting game on the FX. Right, I'm just going to pull that down because of my neck. It's killing me. Okay, so when I'm on the index market, I start on monthly time frame. Let's just clear that all off. Start afresh. Okay, so previous month was bullish. Looks like we've gone down, manipulate bullish month. Sorry, let's go down to the weekly. Okay, so the first month formed a range was formed. We wick below, close above. Now we're running higher. So accumulation, manipulation, distribution. So we're distributing higher to a higher level, right? We're up in all-time highs territory again. It just looks like NQ just keeps pushing. I think it's off the back of the chip news. So we're on week 3. It's a distribution week, and the profile for the week, previous week, is a range. Range weekly profile. All assets are traded above and closed above. You see that there. I don't even really need to mark the high out because we know what's going on. Yeah, so Monday, massive gap up and closed above. Racing for that liquidity above that, the buy side liquidity above that high there. So what I say is all closed above equals higher prices. Looking for higher prices. Let's go on the all 6B. Let's just put that up there for a second because I said that was going to be invalidated, didn't I? Let me just show you what's going on here. Okay, I was expecting that, right? Because our higher time frame draw of liquidity is previous day's high. Reason being is we whipped below on all the assets, right? We traded through the 50% without slowing down. So this is a bigger liquidity pool up here, right? This is a bigger liquidity pool up here, and we've also got this weekly key level up there as well, where price is drawing to. That's such a shame we were out of that. We weren't in that trade. I was not available this morning. But it's only 12 p.m. That's 7 a.m. New York. Well, I'm going to cancel that there. I'm setting an alert for previous day's high. See what 6E does. Once we have taken that liquidity, then we can look to position ourselves short here. We can fade the move, right? So once that liquidity pool is taken, we can look to fade the move back into a mean reversion or a standard deviation target, and we might be able to get back up into that level as well tomorrow. I've lost the screen. Right, bear with me 2 seconds. Sorry, my computer's just playing up. Right, index triad. Where were we? All the assets on the daily have closed above, looking for higher prices. Let's profile the daily as well. Bullish daily profile. Monday forms a range of the week, but we've had an expansion, so Tuesday more than likely to accumulate, and then Wednesday we might get something. Oh, sorry, my neck is killing me. So as it is now, NQ has taken previous day's high. So we've actually got sequential SMT. So that could get us back down to mean reversion trade of the previous day's range. Let's look at the 6 hour. Go on to the 15 minute. I'm just going to profile So we've got a range formed in Asia as well. London should have would have normally. It's not an exact science. It just gives us an idea. Nothing is exact in trading. Otherwise everyone would be fucking rich. Sorry. So let's look at this. We've got a weekly cycle. NQ is above. We've got a standard deviation up in that zone there. Really, I don't start trading this till 1 o'clock, right? So I'm not going to be looking for to enter any positions until 1. So I'm going to give this another hour, because that's when the injection of liquidity comes into the market. I'm not looking to trade that. I would only trade it at 12 p.m. GMT if there was news at 1. You know, so I know volume's coming into the market early, right? So we're with the volume and the big players in the market. Because if you would have looked to have got into a short here, you're going to be swept at 10. So I know this is lunchtime, dead market, between London and New York. So I don't start trading till 1, which would be 7 a.m. Sorry, 8 a.m. New York. So let's see how this candle goes. If we do get into a short, I mean, first target's going to be Asia low, right? That's going to be our first draw of liquidity. We've got some levels to take out here. But like I said earlier, with an expansion on Monday, it's more likely to accumulate. So I'm not looking for a home run on this just from the profile of Monday and Tuesday. It's more likely to close back within the range like this. You might get something down here, and then Wednesday it might be our reversal, manipulation above, and then track back down if we're going to do so, if that is the weekly profile for us. So let's see. We'll watch this 1 hour candle develop. Take a look back over here, what's going on. Yeah, I'm still waiting for this draw of liquidity to be taken. At the moment, we've got nothing here. We are, you know, our two-stage crack has been invalidated. We are in a standard deviation zone, but we're not really like feeling it. That's a shame there. That target there is. Let's just drop onto the lower time frame. Have a little look. Looks like the first candle broke. That means we have to wait for an inversion, right? Get this. Get the close above. Could have traded out of this wick here. 15-second entry possibly. Let's have a little look. Okay, so we get the close above there. Long position above this high. Once that happens, game on. Okay, first target would be Asia high. And then probably 50% of the previous day's range. But if you can see that, it's 39. You're done. You're done in an hour's worth of trading. An hour and a half. 13R, people. Let's hope there's going to be a lot more of that the next 6 months. Like I say, I'm moving to Spain. It's going to be full focused on trading now. No more dipping in, dipping out. I want to try and get this up, my account up to 100 grand, so I can push on with my 5-year goal and raise some proper funds. Right, I am going to be back on at 10 to 1. I'm just going to make myself a quick drink. Yeah, it's good to be back. Feels good. I'll see you soon.